So let me explain to you guys why you're having trouble trading these fair value gap setups like this.
It's because the entire idea is bullshit!
Guys, these kinds of setups are very easily back tested, and I can assure you they do not work. And in fact, when a setup gets particularly popular on the internet, it starts to become worth it for you to trade against them. And more broadly, the idea it's based on that the market maker is the one that controls the market is absolute nonsense. Market maker is mostly just adjusting to current conditions so that they can make money on the spread. Really, you should concern yourself with the ones that the market maker is worried about. I'm talking about large institutions that are going to have to buy huge portions of these assets. When those institutions come into the market, that's when the market really moves. And you might say, well, yeah, but shouldn't I just be able to see when they're coming into the markets on the chart? And the problem with that is that by the time you are sure and you can see it on the chart, it is already too late. You need to know what the institution is going to do before they do it. And the way you figure that out has nothing to do with the charts. Let me show you an example. So first, some context. The dominant narrative this week has been inflation. You see on Wednesday, CPI report came out, really hammered the treasuries. I don't care about what price it is, that it went down and up, or any of those patterns. I'm just noting that that's what's been moving the market. Then on Friday, we got core retail sales, and we were expecting a reading of spot 3 month over month, and we actually got negative spot 4 month over month. So that was a huge miss, a big change to expectations, and it also really messes up the narrative that we're most concerned about inflation, because now we're starting to see actual weakness in consumers. So as soon as that report is released, I know that we're going to have a really big imbalance coming in as those large institutions all scramble to reposition themselves. I'm expecting to see a net imbalance of 50 to 100,000 contracts over the session. That's something that can trend all day. So I was actually able to get in just here on a really quick pullback around 109.03, and then I got out when I started to see some issues in the liquidity. Market makers were kind of a little bit tired here. It starts to go sideways. I got out at 12. But honestly, if I had the time to sit around all day, you really could have just held it, right? You smell what I'm stepping in, guys? Stop wasting your time with charts. Stop listening to these kids that have only been trading for a year or two and have no clue what they're talking about. Learn what actually moves the markets.